Welcome back to the YouTube, guys. We're going to be going over how I made $5,000 in one single trade with the Blitz model. So this video, I actually had this ready from a while ago and I didn't upload it. However, I'm bringing it back because of the amount of requests in the comments for another Blitz model video. So let's go over a trade I actually took. Starting off with the topics, we will cover high time frame institutional order flow, US dollar analysis because this was a forex trade on GU, high time frame key levels, relative strength analysis between EU, GU, and the dollar index, so SMT, internal and external range liquidity, candle closures, and of course Blitz model with a new time frame alignment. So we're going to fractalize it even more. Okay, first off, starting with the institutional order flow. So you can see the market has been very bearish on the dollar, right? And the trend is your friend. Okay, so we're sticking with the bearish price action on dollar. The high time frame is bearish. We've traded up into an order block that you can see here, and we're looking for lower prices. Now, if we look at the British pound, okay, clear bullish institutional order flow. You can also see relative equal highs here, okay, with these three weekly candles, and then we create another false high here, creating these relative equal highs, retail resistance. Right, so retail, I'm thinking the market has topped here with this as resistance, and we know what smart money does to retail ideas. Right, what we're going to be looking at is this right here. Okay, this is the candle we were focusing on, and if we look closer, we trade into a higher time frame key level, right, a weekly fair value gap just below the relative equal highs. So that was the higher time frame key level we were framing our trade off of. Okay, now the weekly internal range liquidity defined by the fair value gap on a lower time frame, a fair value gap is an all low. Okay, and we're looking at a very small internal to external range liquidity play. So as we traded down into this weekly FVG, okay, we also had a daily low taken, which is external range liquidity. And where does external range liquidity then get traded to? Internal range liquidity defined by a fair value gap. So we went from external to internal. Now, the day I actually traded was within this candle here, anticipating that we've had three drives here. So one drive lower, two, and then the third drive, right? Then we see a big bullish candle, and then we've taken out external range liquidity. So it's very reasonable to expect first the previous day high is going to get taken, and next we're going to trade into internal, right? Because external goes to internal. Very, very simple and basic way to derive a bias for one day's candle, right? You've got the weekly fair value gap. The market is trading higher. You then take out external range liquidity and you look for internal, right? This is how easy bias can be, okay? Don't overcomplicate it. Okay, so we're anticipating distribution here. And now let's look at this here. Euro GBP. Okay, so now when you're trading Euro USD or GBP USD, you want to pick the leading asset. Now, the relative strength analysis here, bearish dollar, so GBP USD is bullish, Euro USD is bullish, Euro GBP bearish means Euro is weaker than the pound, which means longs would be better on GBP USD, right? So that's why we focused on GU for the longs in this trade idea. Now, here is a lower time frame hourly chart. Remember, this is the old low external range liquidity on the daily chart, which is also a weekly FVG. This is the daily internal range liquidity, which is the fair value gap. Okay. Now we've seen the market create a false low here, run it, accumulate the stops. Then we see the market press higher, 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 and then we trade up here, and then we see a retracement down between this low and this high. Now what we're going to be looking at is from here to here. This is the Blitz model right here. Okay, key level on the hourly chart, we've got a breaker here. Market trades back down into the breaker. We're focusing on this candle right here. Now notice we're looking at distribution right now. How do you determine distribution? Either closes above candles or wicks below candles, and in this scenario what we have is a wick below. Okay, and then we look for distribution on the lower time frame. So in this case, we're looking at H1 to M5. Okay, If you guys have watched the Blitz model, you'll understand we go from 4-hour to 15-minute FVG or stop hunt, right? In this case, we go from an hourly distribution to a 5-minute FVG or 5-minute stop run, right? As you can see here. Okay, so 1 hour candle, closure within, at a key level, high time frame bias in play. We're anticipating this candle to be distribution. Why? Because of the candle closure here. Now, if we're going with the Blitz model, to catch the distribution of this candle here, we want to be on a 5-minute chart. What are we looking for? A 5-minute stop run or a 5-minute fair value gap. Now, let's go and look here at the time frame, at the lower time frame checklist. Time, so we must be in a kill zone. We must have an obvious draw on liquidity, relative equal highs and lows. Lower time frame SMT must be present, and they must be a lower time frame double purge or liquidity run, and then a lower time frame CSD. So if you guys have watched the Blitz model, you should really understand this right here. Okay, once again, you guys know I do not teach in hindsight. This was called beforehand, as you guys can see, calling the exact level here on DXY to drop lower, as you guys know why, because the weekly chart, as we mentioned in the beginning of the video, was bearish, and you can see here GU calling the longs here with Blitz model in mind. Okay, so here is the 1 hour candle in terms of a 5-minute chart. Okay, so now just take a second here. For those who have watched the Blitz model and those of you who are asking for this video, what do you see here in terms of the Blitz model on the 5-minute chart? Okay, so first you should be noticing the time, right? We are within a kill zone, right? Between 2 and 5 a.m. London kill zone. Draw on liquidity. Do we have an obvious draw on liquidity? Remember, it must be obvious. Relative equal highs, right? So there is an obvious draw on liquidity. Is there SMT? There is SMT here. You can see this is the euro dollar, makes a lower low, whereas GU makes a higher low, right? So SMT is present. Then we're looking for a double purge or liquidity run, and then a lower time frame change in the state of delivery. So notice we have a run on 5-minute stops, right, by this swing low, and then we have a change in the state of delivery. The down close candles, right, that caused the run into the low when the bodies close above. So right as this candle, bodies closed above this candle's body, you could go long in this candle here all the way up to the relative equal highs, and that's exactly how I caught that trade and made $5,000 on it. If you guys enjoyed the video, like, comment, subscribe, and check out the website. I will be uploading consistently now, twice a week, so turn on your post notifications. See you guys in the next video.